So today what we're going to do is we're going to go over some of the most interesting things that we have to deal with in our organization these days in the healthcare marketplace itself, and that's going to be doing group versus individual. So I want to start off our conversation today in a manner of a rebuttal that all of us need to make sure that we understand clearly. And this is that rebuttal that you see right on your screen here. Okay. Now, when I say this rebuttal, what I'm talking about is that when you get somebody on the phone and they tell you that they have group insurance and they want to keep it. I have group insurance and it's the best thing in the world. I have group insurance. I absolutely love it. We need to understand a few basic things that come with group insurance that you must inform your clients about on every call when they're asking you or talking to you about group insurance. So let's talk a little bit about this. So group insurance, and let's just read through this and you can see it clearly. Group insurance is definitely, without a doubt, some of the best coverage that you can get out there. Okay? So we're talking about this first section right here. You're agreeing with them. Group insurance can be some of the best coverage that's out there. And many times, it seems to be cost effective. Let's dissect that statement. So group insurance can be some of the best coverage out there simply because they are typically benefit-rich programs, and there is no medical questions. There is no underwriting on a group insurance policy. So therefore, when somebody goes to work, they seem like it's the best because all they do is sign and drive. Okay? And it seems to be cost effective. Now, why does it seem to be cost effective? Is because the employer themselves must, under Florida statute, make a minimum contribution of 50% towards the employee's benefits only. Okay? So if I am a single male and I am working for a plumbing company and my insurance is $100 a pay period, I get paid twice a month. That is $200 a month. Well, that is typically a $400 policy. Okay? And you need to understand that because they have to make a minimum contribution of 50% to the employee's benefits only. When it comes to the rest of the family, the employer does not have to make any contribution towards any of those benefits, and that's where we can really save some people some money. Okay? Now, there are employers out there, such as municipalities, fire departments, sheriff's offices, that will pay 100% of the employee's benefits. And then the rest of the family is paying for their full amount of those benefits. In this economy, the way that things are changing, we're going to talk a little bit about healthcare reform a little later in this call. As we talk about this, and as these things change, you are seeing more and more of these contributions going down and down. When I first got into the business and we first started talking with people with group, you would find people that their employer would pay 100% of the entire family's benefits. But those days are going away rather quickly. Okay? So understand the first thing. Agree to disagree. You must understand that group insurance is great coverage. There are no medical questions. And it does seem cost effective simply because the employer is making a contribution of 50% towards the employee's benefits. In most cases, the people that we speak to, we can save them upwards of 60% on the rates that they're offered by their employer. The reason for that is because the employers make a contribution of 50% towards the employee's benefits, but doesn't have to pay anything towards your family's coverage. So the first question we ask that person on the phone is, are they getting family covered or are they on a group-sponsored program? Now, the reason why we ask this question first and foremost, because if you're talking to a 24-year-old male and he is a single male with no family, I can clearly tell you right now, you are not going to be able to save him money on an individual plan. Okay? And as we talk about the other parameters when it comes to flexibility and portability with an individual coverage as opposed to group, it is not going to appeal to that 24-year-old that's out there in the marketplace. So if they do say that they're a single individual, at that point, with all due respect, talk to them about accident medical, talk to them about other products such as critical illness or even life insurance. But if you're not able to save them a lion's share of money in that quick conversation with someone, you want to make sure that you gracefully give them one or two other options that they can utilize and then get going. But if they have a family, there are a couple things you need to understand. First and foremost, they charge you the same price whether you have one child or 10 children when you are adding a family to a group insurance policy. What they do on a group insurance policy, they charge you for 2.5 children, the average in the nation for a family, and that is the amount of money that is added collectively on the group insurance plan for family coverage. So in the event that you're talking to a client and they have one child, well, right off the bat, you know that you're going to be able to save them a large amount of money. If they have two children, you will still typically be able to save them money as well. When they have 3, 4, 5, or 6 children, it is going to be very difficult for you to save them money. And at that point, it does not become a commodity-based conversation. So what do I mean by that? Well, there are some things that you need to understand when it comes to group insurance because it is not always about the money. There are a couple things that we need to understand. First and foremost is flexibility. Second is portability. So let's address flexibility first. In the manner of flexibility, when you are on a group insurance policy, depending on the size of your group, you may have multiple plan options. Depending on the carrier, depending on the number of people, some carriers will give the staff 2 or 3 different options to choose from. However, when you are on an individual plan, you can select any policy that you would like, giving choice. The family is also in that capacity on an individual policy able to opt in or opt out of maternity coverage, therefore saving money as well. We should all be understanding and know that maternity coverage is built in to all policies on a group chassis. They cannot opt out of it. So if you're talking to someone who is in their 30s and they are not having any more children, they are paying for maternity built into that policy with the workplace, but if they choose an individual policy, they can opt out of it. Now let's also talk about portability. Probably one of the most significant things that you have to deal with is portability. If you become sick on a group-sponsored plan and you want to port to an individual policy, you have to go through medical underwriting. Okay? It is not a sign and drive kind of scenario. Unless, of course, I take my Cobra option and then I offer a HIPAA eligible program. So let's address both of those. So a Cobra policy. We have 2 options for Cobra. There is Cobra for under 25 employees, and there is Cobra for over 25 employees. And the difference is going to be state and federal Cobra. Now, when we're looking at these Cobra policies, Cobra, the easiest way for you to understand it is look at the first 3 letters, and it's continuation of benefits. If I should lose or leave my job, and I have a group insurance policy, at that point, I am eligible for Cobra. Now, I accept that Cobra, and I can stay on the Cobra policy for a period of 18 months if I would like to. There are some extenuating circumstances when I can stay on the Cobra over 18 months, such as death, some sort of mental disabilities, and other extenuating circumstances. And I mean death of a parent. And then at the end of that Cobra, when I've exhausted the Cobra for a period of 18 months, then I am eligible for a HIPAA policy, which is a guaranteed policy, and I am guaranteed acceptance and coverage of all my pre-existing conditions under that group, under that HIPAA policy. Now, what is the difference with these programs of Cobra and HIPAA? Well, under a Cobra and HIPAA policy, we have to deal with cost because the cost is high. It will be an elevated cost on the Cobra policy and on the HIPAA policy over the group coverage. Well, why is that? Well, over the past couple of years, we've had some changes with taxation of group coverage when it comes to Cobra, and there has been a tax benefit that has been given to employers for Cobra continuance. So they will have a reduction in price over the standard rating. For the first 12 months of the policy, that rate is typically going to be lower. Upon the renewal of that 12 months and we get into the 11th through 18th month, well, at that point, that pricing is typically going to go up. The taxation portion is going to change, as well as the contribution from the employer after month 12, depending on how that policy was originally set up. Now, when we're looking at that, if the person is insurable from the time they leave their job, they should opt in for an individual policy. Because if they qualify medically, they should take an individual plan. And at the end of that Cobra, they go to a guaranteed issue, what we would call a conversion under the Blue Cross programs, or a guaranteed issue HIPAA plan. Under the parameters of Florida statutes, the insurance company has the right to raise that policy premium over the standard rate a maximum of 500% over the standard rate. That is a huge amount when you consider a $100 a month policy becomes $600 a month. Most carriers are due about a 250% rating. Blue Cross's conversions will be underwritten for rate, not for health or acceptance, but for rate. If your client has been on Cobra for 12 months and they want to get off of it and go to a HIPAA plan, they cannot. They must exhaust the full 18 months of the Cobra before they can get a guaranteed eligible policy. Okay, so what happens is let's just say that I am ill and I've been working at the same facility for the last 20 years, and while I'm at that facility, I have a heart attack, I get diagnosed with diabetes, I end up getting diagnosed with high blood pressure, and now I leave my job or I lose my job. What do I also not have? I don't have options. Now, if you can voice this information over to a client, how they want to have those options if they leave the job, how they want to have these options if they're going to make a transition later in life, which most people don't think they're going to, but it ends up happening. The fact that they have a portable policy, an individual policy that they can utilize and take with them has a lot of levity. Definitely is strong and is something that you want to make sure that you're talking to people about. Now, it is very difficult for you to have that conversation with the employee, but have that conversation for the rest of the family that they're paying full price for automatically. So how does that kind of play out? Well, you're not going to try and insure the entire family. What you're going to try and do is you're going to try and insure just the dependents. Okay? So what you're going to do is you are going to look at auto quote, and when you're looking at auto quote, you are going to make sure that you leave the employee off the policy quote. Because the employer is making that contribution, we don't want our person, the client, to potentially lose that contribution. And you want to make sure that you voice that to them. And you say, you stay on the group insurance policy, and let's look at the cost of the coverage for the rest of your dependents. They can typically call their HR director. They can typically contact someone at their office to find out what the cost is for just themselves. And please be mindful that the cost of the insurance is typically on a per check basis, not on a monthly basis. So when you ask the question, you must ask it two-sided. You must ask how many times a month do they get paid, And also, how much do they take out of the check each time? Because you are going to have to calculate what the cost is on a monthly basis, because your prices that you are going to be looking at are going to be monthly as opposed to biweekly or even weekly in some cases. So when you're doing it, just make sure that you are only encompassing the dependents. Now, typically I get asked the question quite on a regular basis is, can they cancel or remove themselves from the group insurance policy at any point in time? And the answer is actually not yes or no. If the benefits or the health benefits for the family are taken out on a pre-tax basis, which they typically are, they may not be able to make a move except for open enrollment. The problem becomes that the HR director does not want to take care of it. I know that that sounds a little odd, but they will typically be able to have the dependents removed at any time, but not the employee themselves. And we are going to avoid that problem because we don't want to move the employee because they're getting a contribution. We only want to remove the dependents. So if those dollars are all taken out pre-tax, that could be a problem. The second problem that you can deal with is if your staff or if the employer is utilizing an employee leasing firm, sometimes referred to as a PEO. Now, if they are using an employee leasing firm, then in that scenario, they will have to contact the employee leasing agency to see if those can be taken out, and they are not always willing to help in that scenario except for open enrollment. So what you do at that point is find out when open enrollment may be, and then you could revisit that conversation at a later time. So group insurance, as we already established, is typically going to be more expensive under 95% of the circumstances. Okay? And they're going to be more expensive, but to the end user, the insured, it typically doesn't look like it because of the contributions that are being made by the employer. And it is something that you have to make sure that you're having that conversation with them. Now, let's go to the next step of group insurance policy. And when we get this, I get this question quite often. It's a letter of credible coverage and transitioning to an individual policy. So if I am going to take an individual policy and you're talking to someone and they have a group insurance policy and they say, oh, I have group insurance, I've got a letter of credible coverage, therefore I'm not going to have any pre-existing conditions listed on my new policy with Blue Cross or United or Aetna. Well, that's not true. It's not what a letter of credible coverage is going to do. A letter of credible coverage is going to show the time frame in which that person has had coverage, but they are still going to have to make sure that they have insurability. Because if they've had cancer, heart attack, stroke, all three, just been diagnosed with high blood pressure, and they can't qualify for basic medical underwriting, then they are still not going to qualify for underwriting and therefore not have a policy issued. What the letter of credible coverage is used for showing credible coverage for a duration to avoid the waiting periods or pre-existing condition clauses that are built within the policy themselves. For example, those of you that are new to selling Blue Cross and haven't looked at some of these, things such as hernias, okay? There is a waiting period on hernias in the Blue Cross policy if they're not replacing coverage. United Healthcare is a big one for reproductive problems. If they have what's called a DEN 6, denied in the first 6 months if they're not replacing coverage or cannot show credible coverage. That is what a letter of credible coverage is for. Even seasoned agents will ask on a regular basis, well, they have a letter of credible coverage. They don't have to worry about underwriting, correct? Incorrect. Still have to be underwritten as a standard policy, but that letter of credible coverage will show that that person has had insurance, and therefore any waiting periods inside the policy due to non-replacement will be waived. And that's why it's so important when you're doing an application with Blue Cross or any carrier that you show replacement and you show length of time for credible coverage to avoid those pre-existing clauses that are within the policy themselves. So now let's talk a little bit about how it works for an employer when we're talking about group insurance, okay? And before we get into how that's going to work for the employer, we are also going to address list bill today because I know that that's been a question or a topic that's been very important, and it's been definitely coming up more and more. So for an employer can write off on their taxes all of their contributions and their expenses towards the 50% or whatever amount that they've selected on their contributions to their employees' benefits. When it comes to those contributions, they cannot pick and choose who they make one contribution to and who they make the other contribution to. When they set up their policy, they're going to say that they make a 50% contribution towards all employees, and then when we're looking at that, they are going to continue to make a 50% contribution to all employees. They're not able to do management carve-outs. They're not able to do anything like that. They have to pay 50% of all employees, and they must offer it to all employees. They also must have participation requirements, meaning that if they have a group of 12 people and only 3 people want the insurance, they are not going to qualify. Now, I have inside the training folder, I have the group guidelines for groups 1 to 50. And in this groups of 1 to 50 underwriting guideline, you will see all of the eligibility factors. So get into the training folder. It's located inside the form center of Blue Cross, but this is going to go through structures. It's going to go through taxes. It's going to go through employee size and participation. So you can see right here, we have minimum participation requirements. Groups 1 to 3, it has to be 100%. Groups 4 to 50 has to be 50%. Okay, minimum participation is 70%, not on a guideline. So please get in here, take a look through this. Okay, this is contributions. This is number of people. Okay, so if you are running a group, quote, and it has 3 people, the employees' minimum employer contribution requirement is going to be 100%. Minimum is 50. This is what I just went over. The minimum employee participation, how many people must take it? 70%. So make sure that you address this, okay? Make sure that you look at this underwriting guideline in here, and this is going to be for groups of 1 to 50. Now, I do want to tell everyone that the magic number in the groups is 5. If you are writing a group of size between 1 and 3, your amount of compensation is not as listed in your commissions, as in your A and B explanation of your commissions, because your compensation is not at the per head rate when you are in those small groups of under 5 or under 4, So please make sure that you address that. Those of you that have questions on what those commissions are going to be, please give us a call, okay? But if they don't have that participation of 70%, we have to have a solution for these folks. And how do we do that solution, and what do we do? Well, when we don't have that participation requirement met, then in that scenario, we need to do what's called a list bill. Okay? So really quickly, let's go through the list bill, and let me show you how that works. It is not group insurance. You've got to understand that. You have to understand that it is an individually underwritten product, but what is able to do on a list bill is that the employer is allowed to collect all the monthly premium from the staff on a weekly or biweekly basis, and the employer is then able to send in the bill on the 1st or the 15th to Blue Cross. They will collect the money They don't have to make any contributions. And at that point, they're responsible for collecting the money from the staff and then paying Blue Cross. It is something that you definitely want to embrace, something that you definitely want to be able to have that conversation. From a taxation standpoint, the employer cannot write off any of the costs of that insurance under Florida statutes. But what they can do is they can help their staff by assisting in the payment of those premiums, because it hurts a little bit less when it comes out at $20 a week instead of $100 a month. So let me show you how we set that list bill up. That way you know where that is. And it just kicked me out. I apologize. I'm sure you guys have all experienced the little kick out from Blue Cross. Okay, so the first step in setting up a list bill, and mind you, it is going to be individually underwritten. It is going to function exactly as a standard individual policy. List bill, or what we call Blues at Work, is simply for you to be able to take the money from a business as opposed to an individual. You are able to utilize Blues at Work for almost all products under the Blue Cross Blue Shield umbrella. Over 65, Part D, which I just recently found out was acceptable on there as well. In addition to that, all of the USA ABLE products, critical illness, accident, and hospital indemnity will be available on there, and all individual products. They can select any product that they want when you're speaking with the staff or the employer. The employer may want to limit the options, but they don't have to. Okay, so step one is clicking on getting into IST, getting into Process and Application, Individual Sales Tool, and down on the left here, you're going to see Blue at Work. Step one is going to be create a new group. I do understand it says group, but this is a grouping of the individual policies. Okay, now for those of you, you will not have to select an agent. You just simply go through it. Next, we type in the group name, the group address, the city. The state obviously is going to be Florida. They do give you other options for that because the home office can be located outside of Florida. It does not have to be domiciled. For example, if we have a listing of people that are all in the state of Florida, but the home office is in Alabama, they are all Florida residents. Therefore, they can qualify and get the Florida product. We list a group size at this point as well. Let's just say it's a group of 5. We are going to select what date or what billing cycle the employer would like to have. We then list the HR director's name or the boss's name, the person who is going to be handling the bills, the email address for that particular person who is going to be handling and addressing the bills for the organization, and then the phone number, and click Save and Continue. At this point, what you are going to need to do is you can either upload a census or you don't have to. Okay? We can add a prospect one at a time by utilizing the Add Prospect button right here, or we can import an entire census. The census is located right here by using the Excel link. Now, what you want to make sure that you're doing is that if you're going to upload a census, it must be in this format. This is the census that you would actually be filling out. Okay? So when you look at this census, let me show you what it looks like here. It just has to be in this format. And the reason why it has to be in this format is because this is what's going to upload appropriately to Blue Cross. Let's just say we wanted to add one prospect at a time. We click on Add Prospect, And then at this point, we go through and we fill out the person's information. Just fill this out really quick. I just want to show you the next step. And email address. Save and continue. Once I'm adding this prospect, now at this point, it is going to look, feel, and act just like a standard policy. We would click on create a new proposal, and then I would just go right into filling out the application. Now, what will happen is what you will see up on the top here, this is what makes it special, is that they are noticing that this is a Blue at Work group and that the monthly billing is through the employer. And that's what's really important. Okay? So make sure that you see that up on the top. And now we go right through the process and we would just simply be filling out the application. Save and continue. So on and so forth. Select our plans. It helps if I actually answer all the questions. And then at that point, you can add each of the employees all onto this program, and all just need to be simply done as you would do any other program. Now you'll see here now that it's going to give you an error message because we haven't completed the enrollment for the group itself. So what we do is when you get that error message, you come back to the Blues at Work, click on My Groups, and then what it's going to do, it's going to show a listing of the groups. Now, when you're looking at this test group, you can see right here it says group status with this little arrow. Okay? Now, what we need to do is it says it's pending employer consent. Now, when we're pending employer consent, it's because we need a tax identification number. You must fill out that tax identification number, and that is giving you the employer's consent. And then what will happen is this will say that it is not pending anymore and it is acceptable. We can then continue to add more prospects. We can continue to view the prospects. If we have a list of 10 or 15 prospects, they'll all be listed here. And then we can go ahead and then complete the transition. Now, in the training folder itself, if we refer back to that training materials folder, you're going to see something here that says Blue Cross Blue Shield List Bill. In this, there are 3 forms that are necessary that you must have and you must send to Blue Cross. There is an employer list bill form, which is the employer consent to salary deductions. This must be signed by the employer. And then there is an employee payroll deduction form, which needs to be signed by each employee. And at the end of the application, when you can upload a document, you must upload the payroll deduction authorization at the very end of the application, where it gives you the option to upload information. So please make sure that you follow those steps. It is a very simple process. You have the flexibility. You can do whatever you need to as far as plan selection. But mind you that this is a great alternative towards group insurance policies. So we typically get asked questions, well, how is the taxation going to be held and dealt with on those plans? And I meant to address this on our HSA training, but I figured that today would have been a perfect opportunity for us to address it. An employer is not able, under the statutes of Florida, to get favorable tax treatment on collecting those premiums. On the employer consent form, he is stating, the employer is consenting that he is not paying any money towards those monthly premiums. However, if the employer allows and makes the selection of HSA-style programs for his staff, that employer is able to make contributions towards an HSA account in a favorable basis and write off all of their contributions towards the HSA itself. The HSA contributions can be written off. Please make a note of this mentally. Write it down, keep it in, file it in your hard drive in your head. Because what happens is at that point, if they're doing it that way, I can make a higher contribution towards my management staff than I can to the rest of my staff. If I'm doing a list bill and everyone is taking HSA style programs, which we have a huge selection and variety of them, I can make contributions towards the HSA as an employer on a tax favorable basis, and that money is for my staff, and they can use it accordingly. If they have an individual program on a list bill, they necessarily cannot write off those contributions. What they do with their accountant is between the employer and the accountant, but I'm telling you clearly that you cannot advise that they can be written off. Again, refer them to their accountant, because that is a much better scenario than if you are in a situation of trying to explain that to them on a taxation basis. So please, use list bills. Now, if we are going to do a secondary training on how to process a group insurance policy, but I do want everyone to know in the form center where all of the materials are. So if you come to your product and forms and you go to benefit summaries, you'll see here there is the small group. Okay, we have our PPO programs, predictable cost, HSA compatible, lower premiums. These are small group policies. You do need to be conscious of small group policies, because group policies do still have a fit in the marketplace. However, with the individual mandate coming through, with these different options that are coming through from our government, and when it comes to taxation, small group policies are sometimes not going to be a good viable option for businesses these days. But they are a great option because of insurability factors, because of the pregnancy factors that are all built in there. So they are still a good option. But you have to be able to have a conscious conversation with your clients and the people that you're talking to is, why not save some money and go to an individual style of plan rather than the small group? Because that is clearly an option for many people. Now, of course, if there's insurability issues, you are going to have to go through the group, and you need to be well versed in all of these programs. Predictable cost plans. The numbers don't align with anything that we deal with in the individual market. All benefit summaries are here. Predictable cost plans function just like our individual predictable cost plans, typically with higher benefits. HSA compatible programs. We have our lower premium programs, which are typically going to be like our 700 series of plans, or hospital surgical plans are also listed separately. So you do have them all here in the form center under benefit summaries. So let's talk a little comparison before we're done for the day today regarding individual, group, and how to have that conversation. So if you get someone on the phone and they have a group insurance policy and you can get a census from that client, at that point in time you can begin to run pricing and you can look at different scenarios. Typically, if you want to do the most aggressive competitive analysis, what you want to get is you want to get a census and a copy of their last carrier bill. So that way you know the pricing that you're looking at, you know the plan design that you're looking at, and you know everybody that's on that policy. Now, when you're looking at that option, there are a couple things that you want to talk to them about. Before you get them in your hot little hand, you definitely want to have the conversation about saving employees money, because an employer cares very much whether their staff is saving money or not. The employer is not making a contribution towards the family benefits if you could go and meet with that business and show each one of their employees how they may be able to save 40 to 60% on their insurance, would they allow you to do that? Typically, the answer is going to be yes. So have that conversation to start with. At the same time that you're having that conversation, you can ask if you can assess their current group insurance pricing. And you can also run individual pricing for them to see if that would be applicable and if it would make sense. I can tell you all that are listening right now that if people qualify for an individual policy, they should take it. Unless they're in a large group scenario that has a very benefit-rich program with a huge contribution from the employer, an individual policy is going to be less expensive with same or similar benefits. Now, mind you, we have to keep fresh in our head the number of children is going to make a difference, and the maternity benefits are also going to make a difference. But here's the conversation that you can have with someone. When we're addressing the maternity benefits, if they're not pregnant now and they're not planning on having a baby in the next year or two, then why not take an individual policy and save that money? That's a great conversation to have. In the event that they do get pregnant, they can always transition back into the group policy even during the next open enrollment period if they're currently pregnant. Why? Because there's no medical questions. They have a letter of credible coverage from your current policy. Individual companies give that letter of credible coverage out. So therefore, there will be no waiting periods on the group insurance policy, and they can get their maternity covered at that point. So it is a good way for them to save some money anyway, as long as they're not going to have a baby in the next 30, 60, or 90 days. If they were going to plan on having a baby in the next 30, 60, or 90 days, stay on the group. Let the group cover it. Take care of the group coverage. Use the group coverage. And after you have the baby, since if it's their first and or second child, address it at that point. Okay? So it is really a good conversation to have about those individuals as opposed to group. When you're talking to the employer, ask the employer, when we're talking about the individual versus group, ask them if you would like to save them some money on a monthly basis. Could I try and infuse a few hundred and or $1,000 based upon your contributions to your staff on a monthly basis? Would that help you? Well, that's a pretty silly question. Of course, a few $1,000s on a monthly basis could help the staff, could help the employer, help do other things for the employees. Many different policies now that are out there that are becoming very popular, especially with United Healthcare and with some of the other competitive carriers on the group insurance side of things, are higher deductible HSA plans. Now, if you're experiencing that and they don't want to have the conversation about looking at individual coverage, even though individual coverage can be 40 to 60% cheaper than your current planning, even though the contributions could save the employer a ton of money, even the staff can save a ton of money for the families and help the families infuse more money into their budget. Well, if they've got a high deductible plan, such as a $3,000 or $6,000 family deductible, then talk to them at that point about selling them ancillary products on a list bill. They can absolutely take the accident medical expense policies and then cover those out-of-pocket expenses. And I'll give you a perfect scenario. A young lady that I know that I do business with, she has a group insurance policy through her employer. They have United Healthcare. They've had great coverage for the last 10 years. This year, the policy got changed to a $3,000 individual and a $6,000 family. They have one option in this group, and there's 22 people in the group. So as I was talking, because she's a friend of mine, we were having some discussions, and she said, well, there's nothing I could do. I hate it. I take my daughter to the doctor. She's got a 10-year-old daughter, and I pay for everything. Her daughter had a slip and fall. She didn't have an accident plan. She ended up going to the emergency room, and it ended up costing her $1,500. She's paying for everything out of pocket. Well, more and more employers are selecting these HSA-style options, these higher deductible plans, to save themselves money because their contributions is what they're looking at. And by doing so, opening up financial liability factors to the staff, and that's a huge opportunity for you to make sure that you are offsetting those deductibles and out-of-pocket expenses with ancillary products such as accident medical expense, because that's the easiest one that you can talk about. And if we're referring to our NEA product or VBA product with our Call MD, now you can avoid those calls to the pediatrician or going to the pediatrician in that $100 bill by simply calling in a prescription, speaking to a physician over the phone. So as we're talking about group versus individual, other things that really come up is, you have to focus on the portability. You have to focus on the cost. You have to focus on all of the aspects that are the hot buttons for the people that you're talking to. You can't talk to a staff member typically about it. You've got to be talking to a decision maker. You've got to be talking to an HR director or a business owner who is dipping into their pocket and having to deal with these costs on a regular basis. The conversation that you have with the staff member, if you're calling an individual lead, is going to be saving the dependents money. As we make our progression and we're talking to business owners and we're doing calls and out calls to businesses themselves, that's when we have the conversation is, would you allow me to show you how individual coverage could save you and your staff between 40 and 60% on a monthly basis? Would you allow me to show you how you can reduce your costs? And that's where you can go in and talk about list bill and talk about these other scenarios that we've been going over today to significantly help the staff and the employer infusing money back into their budget to better make their business sing. They focus on what they do best. You focus on what you do best, being a senior benefit consultant and really focusing on the needs of the employees and the needs of the staff, the needs of the employers, and making sure that everyone is addressed so that way you can do the best possible thing that you can for each of the people that you talk to. And we've got it all. We can do the mix of individual policies. We can talk to them about group insurance if we have to. We can even talk about group insurance for different scenarios on a smaller basis. If they have a smaller segment of uninsurables, for example, there are ways that we can do that. So I want to thank everybody for today's call. I'm going to open up the phones to some questions now, so I'm sure everybody's got a bunch of questions, and that way we can kind of talk a little bit about it, and we can go through any questions that anybody has. So if anyone would like to type in a question, I can make sure that I address it for everyone. And as we have about 8 or 9 more minutes left, so we got plenty of time. I'm going to start going through and showing you guys how you start that group quote. Those of you that would like to stay on the call, what I'll do is I'll start to show you how we can create that group quote as well. Okay, no questions. All right, so in the last couple of minutes that we have, I should be able to zip right through this, but doing a group quote is very, very simple. The Blues program has a button right in the middle where it says small group sales. Step 1 is going to be to hit that rate and roll. And we are going to have a training that is going to be much more detail-oriented on the group plans themselves. It will be a group-only training. You won't have to select a role. You'll come in here. You'll then be brought to the screen that's going to be right in front of you. And you have a couple of options. Small group sales will be located on the left-hand side. You want to do your groups. You want to create a new group. If you'd like to see all your groups, just like we would be in Access Blue on the individual side, just click Show All, and it will be able to search and list your groups. If I want to create a new group, I simply do that, just like I was doing in Blues at Work on the individual side. Description, because you can do multiple group quotes. The effective date, you will want to refer to the field underwriting guideline. And what you'll want to do in the field underwriting guideline is see what the effective date that you will be given, depending on the size of the group. Certain size groups, for example, under 4, are going to make you put that effective date out 60 days. And we do have a question that just came in, which is great. Let me just get this going here, and I'll answer Tim's question. Zip code. Now, SIC code. You have to find the SIC code for the client. That SIC code is going to be the industry that they are working in. You can search by the code itself, or you can search by the industry. Simply come up here and type in what the industry may be. For example, if it was, I don't know, medications, or let's say insurance. It's going to give you what kind of insurance is, if it's an insurance carrier, for example, or an insurance agent or broker service. I click on that. I can see it's 6411. I hit select. Is Medicare going to be secondary? I'm going to say no to that. You're going to want to refer to the field underwriting guideline, because I'm not going to address that today. They're going to ask you if you're currently a Blue Cross Blue Shield group. Total number of employees on payroll. This is where we're going to have to reference this is where we're getting our participation, okay? So if there's 10 people in the group, people that are on Cobra continuance is going to be 0. Part-time employees are going to take away from this 10 number. So if I had 3, let's just say I had 5 people that were part-time, now I'm only working on a group of 5. And number of employees in waiting period, that's something that you're going to determine as well. Click Save and Continue. And then you're going to go right through the process, following all of the questions, answering them, and then we'll get to plan selection, where it does get a little bit gray. So now, you're going to see, you're going to have your favorite set up, but if you want to look at something that's daunting, if you thought that you had a lot of policies that are on the individual market, here is a complete list of all of our group insurance policies. So, my advice is to simply get into Access Blue. I have an email that I can send out to all of you that has the most popular plans. Those of you that are on this call today that would like to shoot me an email at the end of the training, I will send you a PDF document that will have a list of the most popular plans, and that way you can go through and you'll have a listing to where you can actually see what those plans are. Select the plans that you're looking for. Hit Save and Continue. And then on the next screen is when we'll start to build the census out, and we'll start to put in all of the people that are going to be on the insurance policy. Very straightforward, very simple. You'll answer about 2 more pages of questions, and then you'll be spit out a PDF document of what the plan is going to look like and all of the rates. And then, again, we'll address that more on a group training. Okay, so Tim Wilson has a question. Is it feasible for an employer to have both individuals on a list bill and a group if desired, or is it typical to have one or the other? Great question, and I'm glad somebody asked that. Each corporation or tax identification number can only have one. Okay? If they have multiple corporations within the organization, for example, if it was Marks Insurance LLC and then Marks Insurance, a different corporation, 2 separate corporations, then they could have a list bill and they could have a group insurance policy. That is the only way. You cannot have a single corporation or LLC with both, okay? Because on the consent form for the employer list bill, there is a line when you read it that says they do not have any group insurance in force and they are not offering any group insurance. So that current person, that business, one can offer the list, but it would have to be on a different corporate name. Let me give you an example. So if I had a business that I was meeting with, and let's say it was a lawyer's firm, and the firm had 22 people that were insurable, but the 3 owners of the corporation were all uninsurable. They may opt to have a separate corporation for the 3 owners that they do a group insurance policy on, and then do a list bill for the rest of the staff, or vice versa. So they do have that option as well. Hopefully that's clear now. Does anyone have any other questions? Going once? Going twice? Great question, Tim, by the way. All right, everybody. Well, I want to thank everybody for their time today.